What's up, good people? It's your man, Investing with Cam. It's been a while since I've posted or made any content, and so I'm back, you guys, in which majority, if not most of my videos at this point in time are going to be geared towards building a small account. And reason being is because I have a small account right now that I'm going to try and build this up in front of you guys and build my account along with you guys. But as you can see here on the phone or I'm on my phone, but as far as in the picture here on the screen, there's a number of different stocks on the screen right now, but I'm only going to talk about 3 or 4 of them. I may talk about 4, but at least 3 of them I'm going to talk about. And like I said, this is geared towards building up a small account, whether your account, and I would say if you're going to build up a small account, if you're able to, at least try and start with about $1,000. And you're going to see why I'm saying this as we go further along. But this is going to be geared towards trying to start with at least $1,000. You know, everybody's not going to be able to start with that. I understand. Whatever you can start with is great. But if you can't start with at least 1,000, maybe even 800, just depending, and I'll show you why, but $800 to $1,000, and this video is going to be for you. So I'm going to start here with the first ticker symbol listed, which is TSSI and or TSS Inc., in which this company here, as you can see, the stock price, or it's trading at right now, $11.74, which is not an expensive stock whatsoever when dealing with the stock market. But I want to start here because out of the bunch, this one is probably going to be the best one. And reason being is because out of all of the ones I'm going to talk about, TSSI is an extremely profitable company as a whole. And you want to invest in companies that are profitable, meaning that they are making a lot of money and they're going to continue to, and if any hard times, I should say, come along, they're able to withstand those hard times just because they are a profitable business. And so I'm going to hit this year to date. I'm going to go all the way out to max 5-year time frame on this particular stock. Reason being is that this stock actually hasn't been around for 5 years. TSS hit the market or was listed November the 14th of 2024. So it hasn't been on the market a full 2 years yet. But as you can see underneath the stock price, you'll see where TSS is up $2.71 over that, I'm just going to say, year and a half time frame. So this stock has been doing pretty good considering that it was just listed. I mean, it's up almost 30% since it was listed. So once again, this is going to be the best one, I believe, and a great investment. And TSS is its core business is around the AI infrastructure. Okay, in which it doesn't say that here, but it's designed around the AI infrastructure, in which if you're keeping up with the news or anything, even keeping up with the market, we know that AI is a big thing right now, and it's possibly going to be even bigger in the future. And so, like I said, this stock recently hit the market, and this is a great investment if you ask me, because the business is profitable. The stock has been only going up, and they are based in the AI infrastructure market. In which, if we look, this company, the company itself has been around for 22 years roughly. It was founded in 2004. And so we're going to go a little further into depth. Here with TSS. And when I say further into depth, I mean as far as being able to generate income by holding these shares and or just having, because with this particular stock now, with it being about a $12 stock, in order to do what I'm going to show you, you have to have at least, I would say at this point in time, $1,200, okay, in your brokerage account, and or own 100 shares of this particular stock. So we're going to go here. You see, I hit trade options, or here on my screen, I hit trade, and you see where on my screen, it says trade options, in which with any brokerage account, you have to get approved to be able to trade options. But once you're approved, then you can go and use your account to make yourself more money. Okay. And so I'm going to hit trade options here, and I'm going to go to March 27th, which is next week, next Friday to be exact. So next Friday, and let's say if I own 100 shares of TSSI, okay, by owning 100 shares of this particular stock, I can then go and sell calls. So if you look at the top of my screen, you can see where it says sell and then call. Okay, and my videos are, for the most part, are going to be about selling options, not buying. Okay, but about selling options. And when you sell something, that means that you get paid in the process for selling whatever it is, right? So on my screen, I got March the 27th. And let's just say that I don't believe that this share price, the share price of this stock, is not going to go any higher within the next week than about, let's say, $12.25. Okay, so on my screen, as you can see, it says at the top, so it's got the share price here in the middle, and then you see a $12 call, and then you also see a $12.50 call. Okay, so I'm going to choose the $12.50 call because I believe that the share price of this stock is going to stay below $12.50. And as we go further along, you will see why I choose the $12.50 call in opposed to the $12 call. Okay, so I'm going to hit this plus button here on the side, and it takes me to this screen. And so, like I said, I have 100 shares of TSSI, meaning that I can sell one contract on my 100 shares, because each contract consists of 100 shares. So if you have 200 shares, you sell 2 contracts if you like. If you have 300, you sell 3 contracts if you would like, and so on. So I have 100 shares. So I'm going to sell 1 contract, and then I'm going to go down here to the second line where you see limit price. And see, the limit price, there's a wide spread, is what we call it, where you see the bid in the green at 35 cents, and then you see an ask price in the green at $1.15. And then underneath that, you can see where it says high fill likelihood, meaning that if I chose the lower price, which is the bid price, I have a higher chance of being filled and receiving $34.96 in credit. But because it's such a wide spread, I'm going to push the limit. I'm going to try 85 cents. 85 cents, in which the 85 cents is per share, in which you have 100 shares, meaning that I would receive, or you would receive, $84.95 in credit into your account, which becomes your money that you can spend how you would like once the contracts have been filled. But as you can see underneath that limit price, it says medium fill likelihood. But because it's such a wide spread, there's a high possibility that if I was to submit this would actually be accepted, or the contracts would be filled, and I would receive that $84.96 in credit that you see here. And so this is called selling calls. And you can continue that process as long as you would like, up until the point, because at some point the stock price of TSSI could go above whatever strike price you're choosing. And remember, like I said, the share price of TSS right now is $11.70. The call price was the $12.50. But let's just say that the share price of TSSI or TSS goes above $12.50, that would mean that I would more than likely have to sell all 100 of my shares to the buyer. And so then at that point, I would sell all 100 shares. And let's say I bought my shares at $10, meaning that my share average cost for all of my shares was $1,000. I would then sell them at $12.50, meaning that now I would receive $1,250 plus the credit that I received for selling those options. And so now I would actually be receiving $250 because the price increased, plus that 34 or because I raised the bid price. So actually I would have been receiving those $84 or almost $85 in credit on top of the $250. So I've made over $300 in profit if the price of TSS goes above $12.50. But as long as the share price stays below that $12.50, I keep my shares, plus I keep that $84 in credit or $85 in credit on top of that. And then the next week, I do it again. I sell another call based off of the price of my shares, and I just keep receiving credit that way. Now, it sounds easier said than done because there may come a point where, let's say, TSS drops down to $9 per share for whatever reason. And remember, we bought our shares at $10 per share. Now, we still may be able to sell some call options, but the premium may not be as high. And then as well, we run a risk of selling our shares at a lower price. But we always want to, no matter what, at our best, try to stay above, when we're choosing a strike price, above the average cost per share of the shares that you own. Now, let's reverse it. Let's just say that you don't own any shares of TSSI, but you have, let's just say you have $1,200 that you have in your brokerage account. So now we can sell what we call put options, in which you're not going to receive as much premium by doing so, but because TSSI has shown to be a good company, and it's more than likely going to grow over time, we don't mind owning the shares of TSSI either. So I'm going to choose the strike price for my put option now. So with put options, you always sell those most of the time. You don't have to now, but most of the time you want to sell a put option below the share price. Your call options, you want to sell above the strike price because you want to make profit on the shares that you already own when selling calls. But because you don't own any shares when selling puts, but you wouldn't mind owning them, I would just choose the $11.50 strike price for the put that's right below the share price. So we're going to select that. And it's also got a wide spread. And like I said, we have $1,200. So we can sell one contract with that $1,200. If we had $2,400, we could sell two contracts and so on. It's that same concept. And so we're going to sell one contract, and this one has a wide spread. So I'm going to go with the 85 cent per share option also. So we could also receive almost $85 for selling this put option. But now if we go all the way down to the bottom, you see max profit, break even, and max loss. I'm going to start here with the break even price, because if you see here, we sold an $11.50 strike price, but our break even price is $10.65. And the reason why that's the case is because the credit that we receive also is deducted from the cost of the shares. And so instead of buying those shares at actually $11.50, we're getting them at $10.65. And so we have a lower break even and cost on our shares. And then the max loss That's nothing to worry about. That's just the money that you're going to have to spend if TSSI or TSS share price goes below $11.50. But if TSSI price stays above $11.50, then you keep your premium or your max loss money, collateral, which is that $1,000.65. You keep that collateral on top of your estimated credit. So you keep that money, and then you just continue that process over and over, rinse and repeat. But you take that credit and you reinvest that money back into your brokerage account. And so that's how we're going to grow a small account without having to invest any money that we work our 9 to 5 for. We're going to let our brokerage account do all the work for us. And like I said, it's not 100% foolproof, because things will and can happen with the market. But once again, this is a very strong company. Okay. And so owning these shares, it's not like an AMC. You understand, where AMC does not have strong company fundamentals, but this company has and is been profitable up until this point. And as you can see, the stock price has also been going up since it has been listed onto the stock exchange. So this is a very good one right here. It doesn't have a dividend or anything like that. And so this is going to be more so of a growth stock, in which most of your technology stocks are just that. They're growth stocks. But this was the first one I wanted to talk about, in which I don't want to have my videos too long. And so I'm going to talk about others that I really would like you to know about in later videos. But this one right here is going to be more than likely the best investment. Just reason being, it's been around the longest, it's profitable, and the stock price has been going up, and it's a very low cost stock, meaning that it's not expensive. So it doesn't take a lot of money to start investing into a company that has the potential to grow and become like these Nvidia stock prices and Apple and all of these stocks that have grown over all these years. This one right here is one to look into. But I wanted to just show you guys this and talk to you guys and show you guys ways to where you can make your money work for you without having to invest any more of the money that you have to go out and work your 9 to 5 for, if you can get up enough money to go ahead and put it into the market and start that process. And yes, it's a slow process. I mean, if you are able to, in which, once again, the market doesn't really work like that. But if you're able to make $80 a week every year, I mean, you're talking about over $4,000 that you're making per year that you can reinvest back into your brokerage account and make that money make you even more money. So that $80 then turns into, let's say, $160 a week. Then it turns into $240 a week, and so on, that you're able to build upon, reinvest. And before you know it, by the time you're ready to retire, depending on your age, you could have a $500,000 account. Some of us may have a $300,000, $400,000 account, but that's money that we would not have had in retirement unless we decided to invest right now. In which, like I said, this is a real good company for people to start investing in, because Apple, we know where Apple is at price-wise. We know where Microsoft is at price-wise, Nvidia, Broadcom, all of these technology-based stocks. Even though I personally am investing in an Apple, I'm investing in Nvidia, but it's not a lot of money that I'm able to invest because I don't have a lot. So I may invest $10 a week in each one. I may invest $5 a week, but whatever I can invest in those stocks, I'm investing in them. But I'm also buying stocks like TSSI that I can sell options contracts on, which I can take that money, reinvest it back into TSSI, or I could take that $85 that I'm making every week. Let's say over a month's time, that's $320. So I would take half of that 320, which is 160, and I would split that 160 up between 4 or 5 established stocks, meaning an Apple, Nvidia, Coca-Cola. Because Coca-Cola is a less expensive stock. You could even invest in ETFs. I invested in an ETF called QQQI, to where you could take that $160 and invest all of it into QQQI, which pays monthly dividends and has been paying a stable monthly dividend for the past couple of years. So there's so much that you can do, but you want to make sure that you're using companies that aren't going to go bankrupt, and you're taking that money and investing in the quality in which TSS has proven to be a quality company, because they have and they are profitable. But hey, this is not financial advice. This is me just telling you what you can do. You don't have to do it. But again, this is your man, Investing with Cam. I hope y'all have a great one. Stay tuned, because I have a couple of more possibly really good stocks to invest in. Y'all take it easy, and I hope to talk to you soon.